As always, guys, this is just for entertainment purposes only. This is not financial advice.
Hey guys, and welcome back to my channel. As every month I want to discuss my dividend portfolio. So this is the update for June, for last month, the moves I make and why I made them. So I wanted to say that I did make some moves, I did do some purchases. I'm always looking week to week. I'm buying every week and I'm looking every week what is the cheapest right now, what is a good value, what is the most potential, because it could be that a stock today is well valued and then tomorrow it rises 50% and then I don't want to buy it anymore because the value is gone. But luckily I was able to find some bargains on the market out there. So first of all, Click Digital. Click Digital, I was already quite heavily invested, but they raised guidance in June. So this was a nice opportunity for me to buy some extra stocks and I increased my portfolio with 10%. For those who don't know Click Digital is a little bit like the discounter of streaming. So that's why even in a recession time, they are going to perform well, even better than well. The other stock I bought is Nobia AG. So Nobia AG, they sell Scandinavian kitchens. Who doesn't love Scandinavian kitchens? No, quite seriously, it is a boring stock. Not everyone would want to invest in that. But actually, they have planned to build, they're actually building a new factory that will be complete in 2024. And that will allow them to produce customized kitchens much faster. So this should actually give a boost on their earnings, and they're already priced really well. Their dividend is maybe at current price close to 9%. So yeah, I mean, as a dividend investor, that's definitely a stock. If you are a dividend investor, you should look into this stock. The last one I bought was Umpqua Holdings. I don't know what to say about the name of this bank, but it's a bank. I think banks are one of the assets that are going to perform very well in a high inflation environment. So when the rates get raised, Umpqua Holdings will perform well. Analysts think that it will grow for 40% in the next year, and it's already giving a very nice 4%, close to 5% dividend. So yeah, I'm very happy with this purchase. I'm also looking at the rest of my portfolio. BASF, it's really been burned, BASF, because of the gas prices. In the last earnings update, BASF said that it expects a gas price of $75 and the gas price is now at $180. So I'm not even sure they are profitable anymore. But at the same time, they've never been so cheap. They're close. Their share price is close to the 2008 share price. So if you ever wanted to pick up this stock, they're a big company. They're not going to go bankrupt. They're not only in Europe. So if you ever want to pick them up, this could be a good chance for you to pick them up. They also pay out a nice dividend of 7, maybe 8% at the current price. So some other stocks that I'm watching very closely is Intel. I'm considering to buy more of that. 360 Digitech, definitely will be buying more of that, maybe in July. I haven't decided when yet. And I have a few other stocks on my watch list. One mistake here that might have been a mistake is Global Ship Lease. So when a stock drops with 30%, not long after you buy it, I might have bought that at the top of the cargo freight rates. I thought it was a good hedge against like those supply chain issues. But of course, if supply chain issues disappear or we're going into recession, that stock will drop. So then I'm wondering, yeah, what if the cargo prices drop 50%? Is this stock then still a good buy? I look at the share price and see, is this still priced well, even if the ship rates drop in half? So what do we see? PE 2.6, so even if that goes to 5, that's still a nice price. Price to sales 1.2, that's quite nice. And then we have the margins. They currently have a margin of 40%. I don't know if you can see that. Let's slide a little bit to there. So margin of 48% net, guys. That's a huge margin, and you can see this also at their dividend. The current dividend yield is 9.4, and at the current freight prices with a payout ratio of 18%, they can easily pay that. So even if the rates of the freight they drop 50%, then they're still going to be alright. And with a dividend of 9.4%, even if I'm 30% down, as long as I'm a bit patient, it's going to be fine. It's going to be alright. It's not fun to see something so red. I timed that wrongly. I shouldn't have bought the hype. Lesson learned. But at the same time, it remains a good stock to have in my portfolio. You don't know what will happen, if there will be more COVID lockdowns. So in that case, this can be a good hedge, a good diversification. So I'm keeping the stock. When looking at the dividend income for this month, so I had one stock giving out dividends, namely that was Intel. So it gave out $22, and I have QFin that I'm expecting a little bit more than $30 in July. So that is nice to get some extra income that I can reinvest. As a closure, I want to mention some stocks that are on my watch list. Maybe it can give you some inspiration. Also, it can explain why I'm buying, why I'm not buying. So first, Schindler Steel. I'm pronounced that wrong, and I'm not even going to repeat it, guys. I'm really sorry about that. But as you can see, it's massively undervalued according to Simply Wallstreet. I do look a little bit at that, but I think one of the reasons it's undervalued is also because they expect the steel price to drop. I do like this company. They're quite boring. They are recycling steel mainly, and I'm keeping my eye on them. I mean, is the sell-off the way they were sold off right now? It cannot be justified. They might have been sold off a little bit too much, and we can see that here in the last 7 days where it go up a little bit. But let's see and find out. So another stock on my watches I'm watching is Unified Post Group. So what are they? They are a fintech company. They're really nicely valued, as you can see, but they're also making a giant loss. Of course, they're growing super fast, but they have to lend at really high rates of 11%, and they're going almost from quarter to quarter trying to stay afloat. But I think if they manage to keep afloat, I think this company has a lot of potential. So I'm keeping it on my watch list. Also because it's a Belgian company and I'm Belgian. So yeah, I think it's probably the best growth stock in the Belgian market out there right now. So definitely something you have to watch, especially if you're Belgian. Third stock, DDH1. So DDH1, that's an Australian mining company. Guys, if you remember, there will be sanctions for Russia. They will have it much harder to export gold, and a mining company like DDH1 can benefit from that. They have been diluting shareholders for extra investments, but that's normal for gold mining companies, so you have to be aware of that. Then some medical care, energy, gas, VC properties, probably for dividend investments. This will be famous. And then Palantir Technologies. I do like Palantir. Who doesn't like Palantir? But just not at this price range yet, especially because we don't know yet how high the rates are going to go. We're seeing some positive effect for inflation, but we have to see where it goes. Netflix also on my watch list. And also very stock that I like is Unity Software. Why do I like Unity Software? Because they said they can be profitable this year. Yeah, that I like Unity. I've always played games with Unity. I think they have a huge moat, just like Palantir, by the way. Palantir also has a huge moat. What else? Shell, because of their investments, they're going to do in green energy. They also found extra deposits in Albania recently, but they're of course massively overvalued right now because everyone is jumping on energy, so it might not be the right time to invest in energy right now. And then Galapagos, also a Belgian pharmaceutical stock. I do watch it. I think I'm kind of keeping an eye. They have a huge bunch of cash, and that can be good in this market. I'm hoping that they can do a few nice takeovers from companies that are having a hard time. They already took over two smaller pharmaceutical companies actually very recently, so I'm watching them. And then another stock that I really like is Vulcan Energy Resources, but very hard to value right now but they are the company that is going to make sure that Europe has a good lithium supply. So from that perspective, I kind of like them. I have a few other stocks on here that I'm not discussing. I'm considering to buy these less, but as I say, every weekend I just look at what has been oversold, what's well valued right now, and it might be the same one, it might not be the same one. I'll probably another video explain a little bit longer as to my thought process on that. Guys, I really hope you enjoyed this video. Please let me know what stocks you're watching, what stocks you're buying, if you are buying, what you think of the current market. If you like it, please subscribe, and see you next time.